Welcome to the Global Commerce Academy, your go-to platform for 100% free CMA USA lectures. Today we're covering Chapter 5, the Annual Profit Plan and Supporting Schedules from Planning, Budgeting, and Forecasting, Section B of the CMA USA, Part 1, 2025 Syllabus. This chapter helps you combine everything you've learned in budgeting into a strategic, goal-driven financial plan. Let's break it down simply. So, what exactly is the Annual Profit Plan, and why is it so important for businesses of all sizes? The Annual Profit Plan, often referred to as the APP, is essentially the backbone of a company's financial planning process. It's a comprehensive document that details the company's expected revenues, projected expenses, and anticipated profits for the entire year ahead. By laying out these key financial figures, the APP helps organizations set clear targets and benchmarks for performance. Sometimes you'll hear it called the master budget. This is because the APP isn't just a single document. It's a collection of budgets from every department, all brought together to form a unified plan. It ensures that sales, marketing, operations, human resources, and finance are all working toward the same strategic objectives, creating alignment across the entire organization. Think of the Annual Profit Plan as a detailed financial map for your business. It shows how each department's plans, whether it's launching a new product, hiring staff, or investing in technology, fit together to drive overall profitability. With a well-crafted APP, companies can anticipate challenges, allocate resources more effectively, and make informed decisions that support long-term growth and success. The APP is made up of two major parts: the operating budget and the financial budget. The operating budget covers income-generating activities including sales, production, cost of goods sold, marketing, admin, and research and development. The financial budget, on the other hand, covers financial planning, like capital expenditure, cash budgets, and the budgeted balance sheet. Together, they form a complete picture of the company's financial direction. Everything begins with the sales budget. Why? Because sales drive production, purchasing, staffing, and more. The sales forecast includes expected volume, pricing, seasonal trends, promotions, and market conditions. This budget is critical. Get it wrong, and honestly, the whole plan crumbles. When it comes to effective business planning, the APP doesn't just rely on a single budget. Instead, it incorporates a series of supporting schedules that provide the detailed framework necessary for thorough planning and seamless coordination across departments. These supporting schedules are like the backbone of the entire budgeting process, ensuring that every aspect of the organization's operations is carefully considered and accounted for. These schedules are, well, absolutely crucial for keeping everything on track. Without them, it would be nearly impossible to align the efforts of different teams, anticipate resource needs, or respond proactively to challenges as they arise. They help break down the big picture into manageable, actionable steps, so nothing falls through the cracks. Let's start with the production budget. This schedule is the foundation for manufacturing operations, as it tells us exactly how many units need to be produced to meet sales goals and maintain inventory levels. By forecasting production requirements, the company can avoid costly shortages or excess inventory, keeping operations running smoothly and efficiently. Next up is the direct materials budget. This schedule outlines the specific raw materials required for production, including quantities, timing, and costs. It ensures that the procurement team knows exactly what to order and when, preventing delays and helping to negotiate better prices with suppliers. Then, there's the direct labor budget. This schedule details the number of labor hours and workers needed to meet production targets. It helps the HR and operations teams plan for hiring, training, and scheduling, ensuring that the right people are in place at the right time to keep production on track. The overhead budget is another key component. It covers both fixed and variable factory costs, such as utilities, maintenance, and equipment depreciation. By planning for these expenses, the company can better control costs and improve profitability. We also have the selling and administrative expense budget. This schedule details all the operating expenses outside of production, including marketing, office supplies, salaries, and more. It helps management allocate resources wisely and monitor spending throughout the year. The cash budget is especially important for maintaining financial health. It highlights expected cash inflows and outflows, allowing the company to anticipate periods of surplus or shortage. With this information, management can make informed decisions about investments, borrowing, and day-to-day operations. The capital expenditure budget, on the other hand, focuses on long-term investments in assets like new equipment, facilities, or technology. By planning these expenditures in advance, the company can prioritize projects that support growth and innovation. Finally, all of these schedules come together in the budgeted financial statements. These projected reports, such as the income statement, balance sheet, and cash flow statement, provide a comprehensive view of the company's expected financial position. They serve as a roadmap for the year ahead, guiding decision-making and performance evaluation. In summary, these supporting schedules are the building blocks of the annual plan. They transform strategic goals into actionable steps, foster accountability, and help ensure that every part of the organization is working toward the same objectives. Without them, the annual plan would be incomplete, like a puzzle missing its most important pieces. Creating a budget isn't just numbers. It's also about communication, accountability, and motivation. It's important to involve managers in the process, which is called participative budgeting. Make sure to align targets with the long-term strategy and try to avoid unrealistic or top-down only assumptions. When people feel ownership, they really work to meet the plan. An annual profit plan guides business decisions and helps with cash flow management. It coordinates departments, sets performance benchmarks, and prepares you for funding or investments. Plus, it helps CMAs lead planning and performance review. So it's not just a report, it's actually a strategic tool. Beware of overestimating sales or underestimating costs. Also, don't ignore external factors like inflation, policy changes, or even a recession. Not reviewing or updating budgets mid-year can be a big problem, and poor communication between departments can really hurt the process. The key, honestly, is realistic, flexible, and collaborative planning. Let's take a moment to recap everything we've covered in this chapter, and I'll share some essential CMA exam tips to help you succeed. The annual profit plan is truly the heart of any effective budgeting system. It's not just a single document, but a comprehensive plan that brings together all the financial goals and strategies of an organization for the year ahead. This plan is supported by a series of detailed schedules. Think of them as the building blocks that provide the necessary details, such as sales forecasts, production budgets, direct materials, labor, overhead, and more. Each schedule feeds into the master plan, ensuring accuracy and alignment across departments. As a CMA, your role goes beyond just preparing these documents. You'll be expected to analyze every component, identify where actual results differ from the plan, these are called variances, recommend corrective actions, and help drive accountability throughout the organization. This analytical mindset is crucial for both your career and the CMA exam. Remember, for the CMA exam, focus on understanding how each schedule connects to the overall profit plan. Practice interpreting variances and think about the reasons behind them. Use real-world examples to strengthen your grasp of these concepts. This was Chapter 5, Annual Profit Plan and Supporting Schedules, from Planning, Budgeting, and Forecasting, CMA USA. Part 1, 2025 edition. If you found this helpful, don't forget to subscribe to the Global Commerce Academy for more in-depth lessons, exam strategies, and expert tips to boost your CMA journey. Continue your learning adventure with Chapter 6, Top-Level Planning and Analysis, where we'll explore how organizations set strategic goals and measure performance at the highest level. See you in the next chapter.